Boris Schlossberg, Managing Director. Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Hey everyone, good morning. This is Kathy. If you can hear my voice, see my screen, I'd like to start with a sound check today and let me know that everything is working properly. Let me know that you can see me, hear me. Good morning. Hello, Tham, Park, Prosper, good morning. I'm just going to make sure all my screens are going well. Or good evening to wherever part of the world you're in. For me, you know, it's not that early. I'm up much earlier than this normally, but I am delighted to be here with you. Okay, so today we are live trading the US inflation report. There are only a few very market moving events on the calendar that is worthy of us live trading. And that, you know, being the non-farm payrolls report, the inflation report. Sometimes we do retail sales. Boris will oftentimes do the Federal Reserve rate decision. Sometimes I join in. And then sometimes, you know, maybe next week we've got the European Central Bank meeting. We may live trade that as well. But I love to live trade news. And, you know, the key and the part of live trading news well is having a plan and trading the plan. You all know I'm a huge proponent of creating a trading plan and executing the trading plan because that keeps us focused. It keeps us disciplined. It keeps us knowing exactly what we want to do before when the number comes out. So let me go ahead and share my screen. And you're just looking at my charts. Before we even talk about the data, let's get a bearing on what the market is doing. So first off, you know, stock futures are, I'm going to my daily chart, are pretty much flat. Stock futures are down 30 points, which is pretty much flat for the day. You can see the same lack of movement in the S&P as well as the NASDAQ. And so you see that the markets are waiting with bated breath for the U.S. inflation report. And they're kind of waiting to see, you know, how the U.S. inflation report will come out and what the next direction for the equity market should be. We can see from the bond market that the bond market has a little bit more of continuation. And the reason why I'm saying there's a little bit more continuation is because, you know, we are seeing, let me just drop the live trading link for our members. We are seeing the U.S. yields. They continue to rise. And I think this is very important to be aware of because this is probably the most consistent message that we've seen from the markets, which is that U.S. yields are rising. And not this week, but next week on YouTube, I've got a video talking about the importance of yields and, you know, what they tell us about the Forex market. So definitely subscribe to our channel if you don't already and watch out for that. But what the U.S. yields are telling us is that investors they don't think whatever's going to happen is really going to threaten the 25 basis points instead of 50 basis points prediction for the Federal Reserve. And I've seen a lot of evidence for that. Remember at the last meeting, the Fed cut interest rates by 50 basis points. Many people thought, okay, maybe they could do more. And then we had the very strong non-farm payrolls report on last Friday. And then yesterday we had the Fed minutes. And what the Fed minutes basically indicated was that Powell strong-armed the other policymakers in pushing for a 50 basis point rate cut, that a number of them And if you go on my X feed, I actually reposted something by someone else that wrote that I thought was quite intelligent. And basically what she said, and she pointed out, was that some and a few favored 50 basis points, several and some favored 25 basis points. So that means that, probably a lot more wanted the smaller move last month, and that Powell probably strong-armed them for the bigger move. And then on top of that, we already know Powell suggested that they're probably not going to be, just as aggressive the next month. So bond markets are probably the most accurate in telling us how everyone feels. And you can see that the bond market, based upon everything that we just talked about, thinks that it should be, that, whatever CPI comes out at, that it should be, it should not threaten the case for 25 versus 50 basis points of rate cut from the Federal Reserve at the next month. So many of you are asking me, how we're trading this, what to expect. We're going to get to that. If you traded the news with me and traded data with me previously, you'll know that we create our trading plan before the number comes out, and we trade it after the number comes out, and that we always trade reactively. I will trade proactively going into the report, but certainly not the morning of the report. Morning of the report, the market's just kind of consolidating, which is what you're seeing right now, and waiting for the outcomes. You're not going to get anything, and it's just a guess. In terms of Forex market itself, the dollar is actually kind of mixed. Euro is lower. Euro actually dropped to its lowest level in almost 2 months. So euro dollar is stronger against euro, sterling, and the Canadian dollar. It is weaker against the Japanese yen. It is weaker against the Swiss franc. It is weaker against the New Zealand dollar, which is actually quite surprising. I think this move is nothing more than a retracement after after yesterday's big sell-off, because the RBI, as he cut 50 basis points, said more to come. So what is our trading plan for today? And I'm going to trade Forex. Boris will join us, and he'll trade gold afterwards. We're going to roll into a gold S&P, gold indices trading session after this, after my Forex trades. So taking a look at the expectations, you can see that the market is looking for weaker inflation, which, obviously is no surprise, right? Because we all know that inflationary pressures, as warned by the Federal Reserve, is easing. Core prices are expected to be lower. Headline prices are expected to be lower. Year-over-year CPI is expected to be lower. So the experts, the economists, expect inflation to be lower. And I think they're going to be right. I think they're going to be right that inflation is going to be lower. I think they're going to be right that the number is going to be softer. And part of the reason is because with inflation, we always check gas prices on the consumer level. Because gas prices, even though it only affects the headline inflation rate, the Feds told us they focused a lot on the headline inflation rate. So we scroll down here we go to gasbuddy.com, you scroll to the news and analytics. You get this little table here that I always look at when I kind of anticipate or kind of try to figure out what inflation could be. So ignore all these lines. The only one you need to focus on is the green one, which is current. So this inflation report is the inflation report for September. So this is September. This is August. So clearly August gas prices average was $3.40. In September, gas price average was $3.22. So gas prices fell, which is one of the main reasons why inflation is expected to be lower. Now let's talk about, what we can trade. Well, I have been talking about how, for those of you that like to trade props, Forex, CFD, POP, there's really no one that compares to Think Capital, because you're getting all of these professional grade tools along with pretty much the same terms as everyone else, a broker power firm that won't want to put their reputation at risk. And you get to trade news, you get to trade EAs, lots of really great stuff. So whenever we look at news, one of the really cool things that I like, and I clicked on the economic calendar here, is that they have a little database This is the professional grade tool that I'm talking about that tells us, what type of reaction can we expect for each event. So taking a look at the inflation rate, and we looked at non-farm payrolls last week, and we talked about how non-farm payrolls actually has a much bigger impact on the market than the inflation report. If you remember with dollar and yen, the non-farm payrolls report, we were like 180, 190 pip move over a 4-hour basis. Now, over a 4-hour basis in dollar yen, we had last month 128 pip move, it's pretty good. The month before that, we had 92, and the month before that, was a really big one. But we're not going to be sitting here for 4 hours after the event. So let's take a look. Dollar yen, the two natural currency pairs to think about is euro dollar, dollar yen. Should we be trading euro dollar? Should we be trading dollar yen? So dollar yen, last month, 5 minutes after the report, we had a 45 pip move, 50 pip move. Let's see what it was like, 15 pips. So we had basically no additional extension in August, 20 pips additional extension in September. What about 1 hour before, after, which is pretty much the whole time we're going to be trading? So no additional extension in September, no additional extension in August. So that tells us, what's the CPI report? The entire move that we're going to get after the inflation report is probably going to happen in the first 15 minutes. So that's really important information for dollar yen. Let's take a look at euro dollar. Euro dollar, first 5 minutes, euro dollar moves 15 pips. Not much movement. Yes, Think does take US clients. That's another thing. And you can trade on TradingView, and you can trade on MT5, and you can connect it to your TradingView account, and you can use Zip and whatever indicators that Boris had. So we've got a special discount code that we're going to drop in later. And also, if you become a member this month, you'll also get access to Zip and Bounce as well. Just look for that later. Let's just talk about CPI right now. So euro dollar, 16 pip movement, 15 pip movement, very uninspiring. Okay, maybe dollar yen is it. But 15 minutes later, we get about 30 pip movement and no movement in August, and just look 30 minutes, 1 hour later. So not much movement in the euro dollar. The other currency pair that I'm considering is dollar CAD, and I'll talk about that later, but let's take a look at the price action first. Where's dollar CAD? Here. So dollar CAD, 5 minutes later, so not much movement. So it looks like if we want juice and we want action, then we should be in dollar yen. And we're not expecting, even though both of these months, September, August, inflation was very, very important, we didn't have much movement. And I'm just going to look at dollar Swiss as well. Dollar Swiss had some nice movement, not as much as dollar yen, but dollar Swiss looks like it's got a little bit of movement. So using this information, what does this tell us about the inflation report? Well, what it tells us about the inflation report is that basically it's not as market moving as the non-farm payrolls report. What it also tells us about the inflation report is that we're not going to expect significant continuation. Last Friday, we did fantastic because we looked at how non-farm payrolls oftentimes has as much as 4 hours worth of additional movement. But I'm showing you the data here from the Think Capital professional grade calendar that's available to all traders, that there is very little continuation. And I'm actually kind of curious because Kiwi dollar had been a huge mover. Let's see if we get any sort of interesting movements in Kiwi dollar, because that's also on my radar. So also not too much movement, after the events. So that's the main thing to realize, is that we're not going to expect huge movements after the inflation report. So it tells us a couple things. Number one, it tells us we have to be nimble. It tells us that we may not get much more beyond the initial information. And it also tells us that maybe dollar yen is the biggest mover, but we could probably also hide in euro dollar and dollar Swiss and dollar CAD for a smaller movement. the gas price info is just simply gasbuddy.com. You scroll to the bottom of the chart, go to fuel price data and analysis, and then you scroll all the way bottom and you get this table here. So what is our trading plan? All right, so we know, and for those of you, because this is ZIP, and usually when the background is red, it's bearish. If it's trading below the indicator line, it's bearish. When the background is green, it's bullish. It's trading above the indicator line, it's bullish. And as I said, if you try your prop with Think, you will get, if you get a 25,000 and up challenge, you will get ZIP and Boris's indicator for free for a month. So what is our trading plan? Well, we know the dollar yen right now is it was weaker, is trying to rally. We know the dollar yen has the biggest movement. So dollar yen is in the buy zone. So the best trade will certainly be if we get a good number. Now, one of the most important things to talk about is that because I don't think, and I think the market believes with me, that it would take a really horrendous number for the dollar to sell off aggressively. And that would have to be like 2% year over year, minus 0.1% month over month. And even if we get minus 0.1% month over month, it may not be a durable rally. But that is what a minus number, 2% year over year, is what we would need for the dollar to turn negative. So right now the market's trading with a mild dollar bias, in my opinion. And so if we get a positive, let's say positive CPI, then what we want to do is we want to be buying dollar yen because the market is quite bullish dollar yen. Whoops. We want to be selling euro dollar. And I'm also kind of interested in buying dollar CAD, but that's, a little bit. And so let's take a quick look at dollar Swiss 1 minute. Yeah, dollar Swiss is weakening. I'm also interested in selling Aussie dollar because that's been quite weak. If we get a weaker inflation report, you see that, let's remove the other one. You see that dollar Swiss is already dropping below the indicator line. If we get a weaker CPI, the plan is to sell dollar Swiss. I think sell dollar yen could work as well, just because we saw that it's the primary big mover in this pair. And I think that that's pretty much it, because everything else is, and maybe everything else is not in the sell zone. I want to say maybe sell dollar CAD because it's gotten a little overstretched, but I think that might be a little bit, I like the other trades here. So we have our game plan. Stronger CPI, we're buying dollar yen, selling euro dollar, selling Aussie dollar. Weaker CPI, we are going with selling dollar Swiss and selling dollar yen, selling dollar CAD. And generally with live trading CPI, we use 20 stop, 20 target. We'll probably get out sooner because, as you saw from the Think Capital economic calendar of past volatility, we don't always get continuation. So we might try to get 10 clips here and there. In terms of gold, Boris will be trading gold. He will be trading gold after the report. Okay, let's zero in. We've got the number coming out. Let's focus on dollar yen. We're going to see it in the price action before we see it in the news. And then I'm just going to holler the trades out, and then we will see what we get. So let's see what kind of.
Guys, I'm gonna scream out the numbers. There's 33 seconds left to the number. I'll let you know. CPI projected forecast 0.1 against 0.2, 2.3 against 2.5. So anything hotter than that might
Scream out the release. But I'm going to be speaking as well because we're going to see it right in the price action.
10 seconds left.
Okay, probably about 5 seconds left now.
3, 2, 1.
All right, so it looks like strong. Buy dollar yen, 149.40. Sorry, hold on.
2.4 against 2.3. Much hotter. It's going to be negative.
Okay, so when sell euro, it's negative or is it positive?
No, it's negative for the market, positive for CPI. Hot CPI. Hot CPI.
Hot CPI. Okay, this is interesting. Let's give it a second. A lot of volatility. Okay, hot CPI, I would still buy 148.75. Let's see if we get long dollar yen, 148.75. And here, we're getting out 148.95 for and much more than that. I also think euro dollar is going to slide 109.22, 23, I think is a good sell. And so we got CPI coming in at headline number 03, core 03 headline number. Yeah, everything all stronger all around. So yes, 140. We got that trade in dollar yen at 148.75. It just jumped up. We're now kind of short euros. We'll see how it goes. It seems like the market is not particularly reacting positively to this report. We had jobless claims come out too. That came in very high. So that could be making the market a little nervous. Jobless claims came in at 258,000 versus 230,000. So
Right.
that could be making the market nervous
really,
a little bit.
It's a really, really bad combo of hot CPI and hot jobless claims, completely blowing up the Fed idea of good economy with low inflation where they can lower rates. They're not going to be able to lower rates after this number. Absolutely not. And that's going to be a big impact. What you're seeing in the markets right now
I'm going to sell dollar Swiss at 85.75. Stop 20, target 20, see if we get any movement on there. Because it looks like the dollar does want to weaken. And I'm going to close up that euro dollar at 109, 46. There's a lot of volatility in the markets right now. So the trades are a little bit of a wash, but I like that dollar Swiss is zipping sell right now. So I think that that is definitely an interesting trade. I think it's the right trade. I think selling dollar Swiss, we're sold at 85.75. I also think dollar yen is going to tick lower, 148, because the market seems like it doesn't want to rally. So 148.50, it's going to be high volatility. I prefer the dollar Swiss trade as my primary trade. As you can see, dollar Swiss moves slower, but I still like dollar yen at anywhere around the 50s.
When Kathy is done trading, I'm going to show you an interesting chart that kind of shows you the longer term trend of CPI. And the net takeaway is that the last 3 months, we've had positive inflation. After 2 months of contracting inflation, we've actually back up to positive inflation at 0.2 per month, which means that we're running about 2.5% per year. That's well above Fed's 2% target. It really puts them into a hold territory, not into a cut territory, in my opinion. So we have to see. But the markets are recovering the initial knee-jerk down. But this is a typical reaction sometimes we have in the CPI, where we have a recovery and then probably a continuation. Market, remember, has been the market hit record highs yesterday. So it'll be interesting to see. Maybe there's an underlying tone in the market that will overcome this. But this could be one of those days where the market could really sell off hard because everybody was positioned one way, and now the data is kind of surprising them the other way. We'll have to see how it goes. But my suspicion is we're probably going to have a pretty strong negative day before the end of the day today, and we'll trade that. Gold, on the other hand, definitely popped off of this. It is interesting. Gold popped down at 216 in the initial knee-jerk reaction. Now has really recovered strongly. As I think
are you on screen, Boris? I can't seem to get my my StreamYard screen to work.
there you are. I see you.
I see you. Yeah, I see you now. Yeah. All right. So I think we're just going to hang tight. It's kind of interesting that the price action is basically kind of it is interesting and it's not, right? Because we saw in the Think Capital charts that we usually don't get much movement, and that 20 pips is about the maximum movement that we get. So the question is, which side of the market is the right movement? And so right now we are short dollars because we've got the zip sell signal, and maybe it'll take a little while. Maybe it'll take a little bit of time before it gets back down there. But I think that with U.S. yields slipping, stock futures slipping, I think that being short is probably the right trade.
Okay.
So you want to share your gold chart for us to see if there's any movement in gold?
Yes, give me just 1 second. Let me go into my present mode. Share screen, entire screen. I'll go this one. Share.
Sometimes we get, really good trades. Sometimes, like non-farm payroll, sometimes the market, keeps us guessing. And I think with the mixed signals of the jobless claims report as well as the CPI report, we caught the initial move, but it retraced. And, we are now kind of in hold mode. I still think the downward bias looks like the right bias. But we will see. Anywhere, I'm still a seller, of dollars. I think that it should, continue to move lower. But if we get above 148.75, then it's wrong in dollar yen. Then, it's probably going to flip back to the upside. So we'll have to see.
So, here are the charts. We're looking at gold futures on the left. But what I'm going to show you that's very, very cool is we can look at gold CFD as well into Think Markets, right? And as Kathy was saying, very, very cool.
I'm gonna be out. My trades are out right now.
Okay. Do you have anything to add? Okay. So I want to show you guys something very interesting. I was able to connect my Think Markets account, my prop trading account, to TradingView, and more importantly, to my TradingView scalp indicator. So one of the things that's happening to us right now, is we have a potentially buy trade in gold that we could potentially execute. I'm just watching it, but let me just show you how this can be done on the Think platform, which is very cool. So we're going to use the only thing is that in Think you have to, it's 5 ticks is 50 ticks. They just everything you have to multiply by 10 because they're using really, really fine decimal points. So for example, a $0.50 move, as you can see, no, wait a minute, am I wrong? No, I'm sorry. This would be 225. We're looking for $0.50 move would be 5. Right.
So U.S. yields have turned positive, and I always look at U.S. yields as a guide. I think the market's still trying to figure out where it wants to go, but with U.S. yields turning positive, I would be cautious.
You mean U.S. yields are rising? U.S. yields are rising, right? Bonds are falling. U.S. yields are rising.
Yeah, it had gone negative before, and now it had gone negative before. Now it's turning positive.
10-year is 402. 10-year is 408. 2 years 402.
Yeah, so I actually think the market's turned positive bias now, and that the trade, like I'm looking at dollar yen, we went, we're just flipping back and forth, and there's not too much movement.
I just want, if you guys are watching the platform, I'm going to show you. We have 19 seconds left. I'm going to show you how to place a trade on Think Capital if this thing gives us a signal. So we have a buy signal. We're above the long-term trend. 9-10 seconds left. It's got to stay green, but if it does, we're going to trade with $0.50 target, $1.50 stop here, 5 to 15. It's got to hold. Unfortunately, it's not giving us a signal, so we'll have to be a little bit more patient. But if gold intends to rally, we're going to try and see if we can capture the $0.50 scalp here in gold. Right now, we're just not getting the signal. You can see the futures on the left, CFDs on the right, and it's very cool because now you can trade either one or both if you like. And as always, we're great believers in diversifying, right? So more than one evaluation, more than one account, always really, really good. You get to have different experiences. Positives and negatives on both. I'm happy to discuss all of those. One of the major, there are a couple of really cool positives on Think that I like. One of them is if you pass the test, they refund you the money, which is really cool. So it doesn't cost you anything. Also, CFDs always, of course, trade without commission. It doesn't matter because we're trading virtual funds as far as cost goes. But what it does do is it creates a much cleaner trade structure. You win net 5, you lose net 15 or whatever our structures are. You know how, in the futures, sometimes I'll have, $3,000 in profit and 1,000 of that will go to commissions. That's just the nature of the business. But you have to, understand how those things work. And just happy to point those out.
Yes,
to you.
but the dollar long trade for BK traders, I went long at 148.80. The dollar long trade, when it comes to trading, it's all about tracking yields. And tracking yields, I can't even describe how important that is. It really gives you a clue on where the market could go. And when yields turned positive, it really was a huge signal to me that this was going to be a trade to the upside, and that it was going to move upwards. And maybe we should have stuck with our original thesis, which is that regardless of what happens, it's not going to shift the Federal Reserve's thinking. It's not going to shift their idea that, we're probably going to see. What is that?
That was a super fast $5 that I just clipped in US 30. It was so fast that the moment I clicked the button and it paid off. Let me show it to you. If we go into Think Markets history, wait, hold on. You can see I sold 55 and got filled at 49 in literally less than 1 second. So that was a nice example of quick trading on Think Markets. Go ahead.
I was just saying that, tracking US yields is probably the most important thing as the clue to where the market could go. So, now US yields are up. I think the market's decided it's, now we're like 11 minutes after the data. The market's decided its bias. And so as long as US yields remain up, I think the dollar is going to retain its bid, because even though jobless claims have been higher, yet what you have to realize is jobless claims has been very low for a very long time. And so the natural uptick that we're seeing in jobless claims is not unusual. And I think that, that's something that, we all anticipate. And I think, the inflation report is the inflation report plus the non-farm payrolls report is going to confirm that the Fed in no way, shape, or form is going to do 50 next month.
They're not doing anything. I'm going to predict they're going to do nothing. They're going to do nothing. They're going to sit tight. Powell bullied the whole FOMC board into a 50 basis point cut. He's wrong as wrong can be, and they're going to do nothing. That's my prediction. They're going to have to
gold? Why don't we talk about prediction gold? What's gold doing? Everyone's
gold is doing nothing. Gold is kind of quiet. Although gold. You're actually, hang on. Let me go back to gold. Gold is actually does possibly giving us a signal. Oh, let's go back to gold. We might maybe we'll trade gold here. Gold is a buy for us. Let's go make gold buy. Here we go. Buy. Let me see if this works. Okay, so we're looking for this. Is you can see that this is actually a very, very small size because I was just rushing. You can see how in trading view on Think you can actually place the orders with a stop and a target. Our target is 2132. Stop is 1932. I can actually adjust the stop. The stop should be about 150. It's a little bit slips off. Looks like we're gonna get stopped on my gold trade. It was a good thing I did small size, but this was a classic buy, green zone buy on gold. Well, let's see. Maybe we may be lucky yet. Well, I'm gonna hold my breath here, and we're done. And gold actually worked. You saw that. Our classic buy scalp trade. We have the buy label, green zone for the retrace, back to the green zone for the buy up. We bought the gold. You can see how on the CFDs you can execute just as easily as on futures in the same function. That's what's really, really cool. Is what Kathy was saying to you, the scalper indicator, which is our bread and butter moneymaker, right? This is what we make money on every day, all day, anytime, anywhere, any market. And it's not available anywhere on TradingView except from us, is available with Think Capital prop trading. So if you wanted a CFD alternative or CFD complement, there are two types of traders that could really benefit from Think Capital. One is US traders, Australian traders, European traders who already are trading with Apex. I love Apex, great. Our number one prop choice, but want to have a CFD alternative that is be able to trade Forex, be able to trade oil, be able to trade other ideas, be able to trade Kathy's ideas. You could trade Kathy's zip ideas on a prop basis, right? Which is amazing, right? Really, really amazing. And all those traders as a complement. So you have an Apex account, you have a Think Capital account. It's always great to have multiple accounts. I'm a great believer. You want to have as many prop accounts as possible. So you have different opportunities, different terms, different execution schedules, all that stuff. And then the other set of traders, many traders in the room I know, who are in emerging markets, who are in Africa, who are in Pakistan, who are in Latin America. There's a lot of countries that are just simply excluded for various reasons from being able to trade on Apex. And these are you can have a small account or a large account. So it's very I think budget conscious, and more importantly, as Kathy was saying, they'll refund you the money if you pass the test, which is really nice. That's a unique value proposition that nobody else has. So all in all, you replicate.
Actually, a lot of people have that. A lot of prop firms refund once you pass, like FTMO does.
Not on the future side, no.
Yes, but basically their terms are the same as everyone else's, but you get their tools and they're cheaper, and you get the broker powered, so you're not trading with a fly-by-night firm. So it is something that, if you trade Forex CFD prop, they should really be on your radar, because they're just as good term-wise as everyone else. But, you've got these cool tools, and it's broker powered, and you can trade on TradingView, and you get access to Zip and BK Scalper for 1 month with 25K up accounts. In terms of CPI, sometimes we make money, sometimes we don't. Today is just really back and forth for me, which I'll admit, happens. And you saw from the economic calendar that we don't always have a lot of movement after CPI, and I think the market's still trying to figure out its movement. And the best time to really trade these reports is what I do, which is, in reality, with BK Traders, we trade at the session after. So we'll be trading tonight at the Asia session. Once all of this dust settles and the market figures out which way it wants to close and which way it wants to take dollar yen, euro dollar, all the pairs, we'll be looking for our fresh trades off of that. And that is when we get the highest probability scenarios for our trading. Otherwise, the market is still going, it looks like it was going up. Now yields are back to flat. And I personally would stand aside until we get a little bit more clarity.
Yeah, I think we are doing fine, because it's pretty clear to me where equities are going, and they're going down, right? So
yeah, so that's even better.
Yeah. So I'm trying. The only thing I'm trying to do is I'm just trying to understand the tick structures here. Yeah. Okay. It's 10 ticks for a point, and it would be 30 ticks here. Okay. So that's correct. Okay. So what you see on the left is futures CFD, my favorite product, the S&P 500. What you see on the right is the exact same product in CFD form, the SPX, which is on Think. I'm going to trade this for 1 point, just the same as futures. What I'm doing right now is we have a negative trend. We have a sell label. We're just looking for the red zone to appear. Once we get the red zone to appear, we're going to short the S&P, because I think equities are going to revisit the lows and probably make fresh lows. But you guys all know, I always say this. We trade what the market does, not what we think the market does. But the point is, right now we have a potential setup. So I'm anticipating the setup, and I'm going to try and trade the setup on the CFD again, just to give you an idea of how clean and easy it is to do it. You also see, what I really kind of like about this, how like when we trade futures, which I'll also be doing with you a little bit later. We're always trading through TradeAvate, because TradeAvate is super fast, right? Because trading on TradingView is a little bit slow. Through Think, because they are connected directly to their broker. What we're doing right now is I'm connecting directly to the Think Markets brokers servers, and they're super fast. I'm like really impressed. You saw how fast that US 30 trade was, so fast that before Kathy could even blink, it took place. Now, the one thing I will say that's kind of interesting, and don't be shocked by this, is that this is a 1 minute chart, right? So on a 1 minute chart, a tenth of a millimeter difference will create a different pattern. It's just the nature of the beast, because the moving averages is calculated here on futures-based ticks, and this is based on CFD ticks, and there could be just a tiny granular 0.10, 0.001 difference. So sometimes this will look red and this will look green, and you just have to accept the fact that you aren't always going to get 100% duplication of fidelity, because it's indicator-based, and because of indicator-based, it's not precise. It's always going to be relative estimate, right? So right now they actually seem to be matching pretty well. And honestly, if the price goes half a point below moving average, it's going to show us red, either way. But just be prepared that occasionally you're going to get a futures chart signal and a CFD not a signal, or a CFD signal not a futures chart signal. So just be mindful why that is. On a 1 minute chart, the granularity is so fine that sometimes you'll get a discrepancy, but rare. I mean, rare. I would say, 1 out of 20 times. But, don't be surprised if that happens. Okay, I'm waiting 24 seconds. Still not showing me, it's got to stay red, right? So we're waiting for the thing to hold the red zone to give us a reasonable chance that this probably going to hopefully continue to the downside. But right now the market has found the bottom at this 73 zone, the 816 zone. I still think, we all know as I say, I'm going to qualify what I think, but I think we're going to break the 5,800 on the few. We're going to come back down. We hit record highs yesterday. CPI surprise. Remember, this is the September CPI. This isn't the October CPI that's going to be even worse, because it's going to be, pressures on Chinese stimulus. Commodities have gone up since then. This is like when oil was down. Oil has been up like $8-9 since then. October CPI is going to be worse, in my opinion. So I think the market is not going to like this. And if it does like it, then, I'm wrong. But the most obvious analysis to me is that we have profit taking in the equity market today.
So we have a question about how to check the yield curve. Boris, do you just want to show US 10Y? You can just add it to, there it is. You could just use it, pull it up in TradingView, click on US 10Y, which I think you have it there. I'm not sure. Or 2Y, whatever you want. But basically that is showing you. Just click on it on your right-hand side watch list.
Yeah, I'm trading right now. So
all right. But anyway, you can see on Boris's right-hand side watch list. You can
right
add
here is US 02Y on this. This is the 10, the 2-year rates,
and the code for 10-year, which is US 10Y. And then this is a 1 minute chart, but if you put it on a 1 hour chart, for example, you'll see the cleaner price action. Right. And it'll show you how it's been moving. So usually I have it like Boris does. I have it on my watch list, and I've got my right-hand side, my eye looking at it the whole time.
So, what's really cool about TradingView, you see how nice and clean and visual it is. We're short this S&P looking for a 1 point target, as we always try to do, which on the CFD version is going to be like 577.08 with a stop. The stop should be 15. So you could actually manually visually bring it down, or you could just modify it and you could just make it, 15 like this and make it 5 like this if you wanted to kind of, give yourself full granular control. And boom, you see it's all set up. It's all nice and clean, and we're done. And here we go. My second CFD trade of the day today with you guys. Boom, boom, bam, bam. Thank you, ma'am. My favorite type of structure. Oh, okay. Check this out. I want to show this to you. You're gonna like this. This is whenever I haven't done this in a long time, but here we go. Here we go.
I do like that. It's very, very nice.
But anyways, the most important thing, isn't the profit. The most important thing is the structure is the same. It's super clean and easy. I mean, in fact, I would say it's easier in some ways than the future setup, because we're using Tradeovate through TradingView. And look at the granularity. Look how I was able to just, granularly visually set my stop and target, adjust all that stuff, do whatever I wanted to off the chart. Everybody loves trading off TradingView. Every time I poll everybody, it's like 100 to 1. They all want to trade off TradingView, right? And this is a great thing about what's what I like about Think a lot is I didn't think that their TradingView was going to be that well integrated, but it really is. So once you kind of try it, it's really a lot of fun. Give it a shot. I just put the link in. Let me put the link in again so you guys can get the discount on Think.
So Marvin is asking, how can one trade the dollar since it's positive CPI, negative employment data? Well, I think that, the best way in my experience to trade it really isn't to, go back and forth on the news, but to wait for, in my opinion, the Asia session. There's a reason why I pick specific times of days to trade. Either the New York Open at the early New York Open at 6:30 a.m. or the Asia session at 8 p.m. New York. That's when the dust settles. That's when Asia wakes up and they see the number and then they react to it. And that's what I think is the best time to trade.
Yeah. Was it? It's so early. I forgot that we started at 8:30. It's not. We still got about a half hour before market opens, right? So I'm gonna just kind of chill out. Let me see if there's any good questions here.
Why don't we do a poll? And why don't we add the poll?
Yeah, you know what I want to do a poll. I want to ask you, given a choice, let's see what do you like to trade? What's your
TradingView or
what do you like to use as a trading platform? And we'll do MetaTrader
or TradingView. I think that's a very good question.
Yeah. Or TradingView. Okay, let's do that poll. Let's see what you guys prefer. It'd be interesting to see. What was it? There was a poll yesterday that was kind of interesting. Kay, what was it? I did a couple polls yesterday. One was swing versus scalp. Oh, so the question was, do you prefer to make between 0 and 5 trades per day, or between like 10 and 20 trades a day? And not surprisingly enough, 55% of the people preferred to make 5 trades or less, but 45% of people were looking to scalp out. So one of the things we talked about, guys, and this is we talked about this a lot. We have the time now. I can actually show this to you. I talked to you about the idea of how there's always a transition, usually always a transition trade around either the start of the session in New York or the middle of the day. In other words, when we go from buying to selling, and using the scalper, we can actually create a much bigger, longer term swing trade idea. So if I go back to, I think yesterday it was all up. We literally did not have a change of trend, but let's use the CFDs as our structure. And I want to, let me see if I can go back. So, we talked about, so this is what we talked about, that, you have this generally a trend move that starts around 10 o'clock, right? And once we're above the long-term moving average, the black line, and we've established at least one green zone above it, and we're holding above it, getting long here for not just, for 5 or 10 points like we do, but for 30, 40 points, which is ideal for CFD trading, right, is very, very viable. Like yesterday, there was a very, very nice long trade. And then when you go back and you have, the midday kind of adjustment, and then at 1400 hours, again, we're looking for some kind of a signal of a trend. Here again, long-term trend over here. We hold the greens. We're above the greens over here. If you want to, what I like to do is I want to have the second green zone. So you have a first green zone. It holds above the black line. The second green zone, I'm going to get long here. using just like a nice wide 30 or even 40 points of stop and target, a one-to-one trade, just one trade, 1 or 2 trades per day. You long over here, 40 points in about 50 minutes. Super clean, super clean. You can do. Let's do NASDAQ again. This was Wednesday. Let's go back to Tuesday. You can see how time of day and structure of the trade. Same idea here. Remember, you see this. We're switching around to the 1400 hours. First green zone above the moving average. Second green zone. I'm going to get long here. 40 points, stop. 40 points target. Get long over here. It goes down maybe 10 points against me, and then a 40 points nice and clean move into the close. Really, the single most important thing, which I keep telling you, is it's not the indicator, it's how you use it, right? It's the indicator is just there to give you signals. It's how you can interpret those signals in the most profitable, functional way that works. With the equity market, what we're looking for is time of day movements, and those things repeat themselves over and over and over again. The close gives us a signal. The open gives a signal. After 10 o'clock in the morning, New York, we want to see a trend. After 1300 hours, New York, we want to see a trend. Once that trend is established, we can join it for one trade. Boom, we're done. Look how nice and easy that would have been. And I'm sure it's going to happen today too. So you can use this thing not just for complete dopamine trades like we do during our live trading, but for just 1 or 2 intelligent position trades, still make money. That's the beauty of it.
In terms of the poll, I'm actually shocked that it's pretty much 50-50. It's 43%.
A lot of people still, a lot of people still love MetaTrader, but it's not. It's actually it's impressive that it's 57 trading views. So it's really 60-40 if you think about this. And what I guess my point is, everybody's moving to the web. It's so much simpler. I mean, if nothing else, you got to agree with me that TradingView is a much simpler experience for a point and click trader than MetaTrader is, and that's really, really attractive. But yeah, I mean, everybody loves MetaTrader, and of course, guys, I'll be talking about this next week. The ODP robot is coming. The new version is kicking ass, and I've showed you how well it's been trading on a 1 trade per day basis, and I'll be holding a webinar next week on the new continuous version that's just really, really done really well. So MetaTrader very much has its place, but I think MetaTrader is really going to be the algorithmic solution, and TradingView is going to be the point and click solution. And we'll have solutions for both of you guys for both kinds of trades. So I'm very excited about all of that.
All right.
Yeah.
So I'll let you roll into trading, Boris. I think that, for me, I'm just going to wait for our Asia session zip trades. The market's really not going anywhere clear, and it's just going back and forth. And so, I think it's important to know when to just step aside and let the market figure out what it wants to do.
No, exactly. I just want to let's take a look at what I want to show you guys. This is the chart I was telling you about before. This is what I want to show you. So this is the CPI, like going back a year, right? And this is why I'm like, I'm so much more bearish on the Fed than just conventional wisdom is. What you see is, we had a mild negative adjustment on inflation for two months, right? And everybody's like, oh, inflation is beaten. And what you see now is it's not beaten. Yes, it's stabilized, but it is high. I mean, that's basically 2.4%, 2.5% on a steady basis, and that may be a trough. We may come back up to 3 to 4 if oil prices start to pick up. If Chinese demand for commodities starts to pick up with their stimulus, there's a lot of potentially negative things for as far as inflation goes. So it's an open question. With the Fed lowering rates, that's also inflationary, because now the cost of money is cheaper, and therefore you can do more borrowing, and therefore you're going to be able to overpay for goods and services. All of that creates its own dynamic, in my opinion. That's why I'm much less confident the Fed is going to. I think the Fed is done for the year. That's it. I think we did the 0.5 point cut. Now they're going to sit stationary, and I think that's going to be interesting, because we'll see if that creates price earnings compression on the S&Ps. We're very, very expensive. Everybody's making the argument that a valuation on the equity market at 25 trailing earnings is really expensive. It should be around 20. So there's all sorts of possibilities here for negative move. I know I've been saying this forever, but eventually I will be right, just like a broken clock. And right now the data is starting to confirm my negative thesis. So that was interesting as far as that goes. Plus, jobs are coming back up. You know, one of the things that people were talked about when you oh, I think I had it on my. Let's go to my Twitter. I got to find this thing. It wasn't my analysis. It was somebody else's analysis, but it was a really, really brilliant analysis. Let me go to, where's my profile? Gotta find this tweet that I did. Hey guys, and everybody on Twitter, come join us on YouTube so I can show you all the stuff. By the way, how insane this simulation is of storm surge. I hope. Who's in Florida, by the way? Is everybody? It looks like the worst is over and you guys are okay. But anybody from Florida, chime in. Let me know how you guys are doing. You know, I have family over there. So far, so good. Okay, so where is this? Oh, so first of all, Barry puts up a really, really good chart saying that the long-term trend on payrolls is actually, you know, quite negative. But then there was, oh God, now I got to find it. Oh, here it is. This is it. Interesting counterpoint to rosy jobs data arguing that seasonal adjustment was the biggest add in decades since 1996, right? Government jobs were 750,000, primary driver of low unemployment rate, and decline in average hours worked actually suggests more recessionary levels. I thought this guy, Marco Berkovitz, you know, feel free to follow him. Good guy. I did a follow, did this analysis on it. And I thought that was a really interesting out of consensus analysis on jobs, which kind of, you know, plays into my more negative bearish thesis on equities. So, you know, we'll see if it plays out. But, you know, but I thought that was kind of interesting. In the meantime, we are holding the lows, and this is where it gets interesting. Is the market going to shrug off the CPI, and did we make the session lows off the CPI, or is this just the pause that refreshes? They're just trying to pump it up before the open so they can get everybody to sucker in and buy on the open, and they can just drop it like do a full rug pull on everybody and break the lows by then. Right now, we don't have any signals. You know, we're just, you know, biding our time, awaiting our point. We do have, I mean, is this the SPX? Yeah, this is the Think Market SPX. We do have, remember, a buy in a negative zone is actually a sell signal. So we have a buy signal that's turning red, big negative move, 14 seconds. We certainly can set up a possible sell trade here in the S&P. So we'll take this one for 1 point. It's a big move here, but and I can, and here's the thing that I can actually adjust this trade, right? Like I told you, we can adjust the trade. It allows me to just physically adjust this, you know, just down to a penny, right? In terms of stops and targets, like this. So now it's adjusted. We'll see if the trade works for another point. So our target would be 76.14 on the S&P, the SPX, which is the CFD derivative of the S&P. Otherwise, I'm just looking at my other charts here. So same story, by the way, in the Dow. I kind of just missed the Dow, but if we go to the Dow, right, a buy sell here, that would have been, you know, 5 points here. I guess we could try it here. So I'm a little bit late here. So this would be, is this correct? Let me just, the only thing I have to just, yeah, I think this is correct. All right, let's try this. Select any field to activate placement. What happened? Oh, not enough funds. Oh, this is the only problem. Yeah. So I'm trading kind of the smallest possible account, just, you know, for to show purposes, and I can only do like one. I can only do one contract of US 30, and since I already have an S&P contract, I can't do anything more. By the way, it looks like the S&P trade is going up against us. So, you know, this particular, oh, and we just got stopped out. So this particular trade did not work because they really did hold the bottom here, and this buy signal just didn't work. So okay, first miss of the day. We've had two good wins. We'll look for the next one. But the idea here is that we can completely replicate everything we're doing on the future side. And look at this. This is it's brutal, right? It takes me out only to probably be right. And as I said, I told you this yesterday. You can be right on the trade and wrong on the execution, and that happens, and you just have to accept that. That's just the nature of the beast. The market will just take you out on volatility move. And this was just it looks like it was just a quick volatility move that took me out, and we know we're probably going to go down. But what's more interesting, I think, is just the fact: do we hold the CPI lows, or we're going to break them? I'm actually going to curious. Let's before the market. Let's do another poll. I'm going to do an end poll here. Let's see before the market opens up. Let's see who's. You can take a victory walk if you're right. Will CPI lows hold for equities? Yes or no? Simple yes or no. Let's see what you guys think. Let me know. I'm going to vote no. I'm going to vote they're going to break them. It may take a little while, but I'm going to vote they're going to break them. But we'll see. We'll see. I'm looking to see if there's anything else going on here. Everything is super quiet. I think we're just kind of trolling and waiting for he says Roma says he's better at scalping than intraday. That's fine. Screen is blurred. Is my screen blurry or is my screen clean? Let me know, guys. I thought I would be clean, but we're having okay. It should be streaming cleanly. Let me know if you guys are seeing the screen clean. Screen is clean. It's okay. Yeah, 1050 clear. Okay. So blurry for a while, then corrects itself. Okay. So it sounds like it's well, remember, today is a lot of people are streaming for the hurricane. And, yesterday I was watching some streams on a hurricane and they were just, YouTube was clearly stressed under the load. So we may just be experiencing that because I'm streaming 1080 and people are saying they can see it clearly. So, so we'll just let it play out. All right. I'm watching more charts. It's kind of very, very quiet. If we rotate, here's, if we just rotate through futures on this side. So gold is up actually, right? So gold is interesting. Gold is up so gold is above the moving average, has a sell label. So if gold goes green, just like, we made money on the green side in the first move, we don't have a sell label yet here. So don't have a sell label, I don't have a trade. By the way, here is S&P showing another red label with 15 seconds to go. We're going to go right back into it. If it goes red, I'll take another shot at this. If it goes red, because my view was that this was this could have just been a volatility stop out. Just kind of because the one thing we talked about is I don't like huge candles. This was a 4-point candle, right? Selling the 4-point candle is always a bad idea. I just wanted to sell it to show you the trade, but generally not a great idea. Gold over here also in the sell mode, which means that if it goes green, we're going to be buyers of gold. So here we go. It's 37 seconds on the sell side. This is second attempt to try this buy sell mode. Hopefully the candle doesn't get too big. I think, we're going to just stay very, very patient on this candle and give it a shot. All right, I'm selling here. And the target is going to be here. I'll adjust the target. We'll adjust it to 5 and 15. And see, so why is it 450? Okay, 5 and 15. Okay. So the target is going to be 78.10 on the S&P. In the meantime, gold kind of coming down, but still staying above the long-term moving average. But if it breaks below, then this whole long trade, it gets invalidated. But if we consolidate here, go green, gold becomes a trade for us as well. Really, what did Kathy say about how CPI actually has this very, very jerky reaction? This looks like to be, I'm kind of falling into the trap of no continuity, right? CPI actually does not have a lot of continuity. Really interesting. This is definitely proving itself off the Think calendar. Generally, this type of a pattern should have nice, clean continuity to the downside. The very fact that we're just kind of seesawing in this, what is this, 3-point range on the S&P is probably a good sign for us to just wait, let it really establish itself either below or above the moving average. Yeah, second attempt at a trade that's just not working. The only thing it's hard to scalp it was so small with this spreads. It's only, remember, I'm using a relatively wide stop targets. S&P is definitely by far the most challenging one. So you're absolutely right. Like if I am, I'm just using S&P because it showed up as a signal for us. But the real trade, what's much easier to scalp with is the US 30. When you're trading CFDs, it's much better to trade the US 30 as an instrument than it is to trade S&P. It's just that I remember S&P US 30 is so rich that I couldn't do it. And I couldn't have two positions at the same time. But focusing on this would definitely be a better trade. Regardless, though, it doesn't matter. The setup should work. The spread shouldn't be a problem. The issue today is not the spreads. The issue today is no continuity. Every sell trade is just selling the bottom here. They're really buying the market. They're buying the market pre-market, and I'm trading pre-market, which I shouldn't be doing. But I just wanted to show you the setups and the structures. It's more important to me to show you the mechanics of how these trades go, because there's going to be 1,000 trades every hour for you to replicate. But I don't. Obviously, I'm trying to pick. Oh, here we go. That is an ambulance. That is definitely an ambulance. So, obviously, I'm trying to pick the best trades, but it's actually more important for me to show you trades. And right now, the setup is just not working because there's no continuity. The two continuous sells into the bottom right now, just because it's kind of holding bid. Now, okay, so here I'm actually free of margin, right? So now we could actually try this one more time on the US 30, which is very, very clean. The spreads are really, really tight, like 1.5 spread on this thing. But it's got to give me a red signal. So far, it's not doing it. What you're seeing and I'm gonna close this out. What you're seeing right now is very much the CPI bottom and the market just buying it up. Like the market just does not care, which is shocking to me. But that's what the market wants to do. If we go positive, we'll get long. But let's see. It's not, the opera isn't over till the fat lady sings. Let's see how many of you remember that quote. You got to be super old to remember that quote. You guys ever heard that quote? The opera isn't over till the fat lady sings. You have to be ancient like me to remember that quote. Anybody remember where that's from? Yeah, US 30 is doing higher highs. You're absolutely right, Andy. That this is a classic example of the market buying up the bottom. So trying to short this is kind of futile, right? It is definitely futile. And I would, it'd be much more intelligent for me to just wait for a sell signal and a follow-on signal after that in order for me to really create a sell trade. But if we get red again, I'll go short again. Yeah. So let's see, Kate Smith, somewhere in the right. The opera isn't over till the fat lady says, well, that is really, really old, but it's a little bit more recent. Remember who said that? I'll give you a clue. It's a basketball coach who said that. Nobody remember? Okay, this is really, really going back. Before the Washington basketball team was called the Washington Wizards, they were called the Washington Bullets. Naturally, after the violence in Washington, D.C. and the high crime rate, they decided that it wasn't politically correct to call the Washington basketball team the Washington Bullets. By the way, talk about the two most impolitically correct teams in professional sports. Washington used to have Washington Bullets as their basketball team and the Washington Redskins as their football team. And for like literally decades, they refused to change the name of Redskins, which is like literally the most racial name you could possibly, create, just because, that was tradition. So, be that as it may. Anyways, Washington Bullets used to have a coach named Dick Motta. And his famous saying was sort of like, that you don't, there's a NASDAQ sell. So let's go see what NASDAQ is showing us here. Nothing on the CFDs. Okay, so this is interesting. See, on the CFDs, it didn't show us a sell. On futures, it did, right? So now it's showing it doesn't. Sometimes, again, it will be a little bit late on the CFDs. Anyways, that was his big saying. Yeah, there's absolutely more action in indices than there is in Forex. You can make 20 trades in indices before you make one trade in Forex for the same amount of size. So here is, ironically enough, by the way, NASDAQ, oh no, and NASDAQ probably would have stopped me out. It was a 362. No, 362. NASDAQ would have worked as a sell trade. We just chose the wrong trade. I'm sorry, I was looking at the wrong trade. But NASDAQ actually would have stopped us out on this one. It retraced back out. The second NASDAQ sell would have worked. And now we have a third NASDAQ sell signal. Look how interesting, by the way. We have 3 NASDAQ sell signals on the futures, but none on the CFD. And that's what I was kind of telling you, that it's sometimes you're going to get discrepancy because of very, very fine 1 minute granularities. It's rare that you're going to have, it's interesting how you really don't have, there's a lot of different wicks here. It's really interesting how this doesn't show us a lot of the CFD marks. When you're looking at the US 30, for example, you have a much cleaner, better match. That's why US 30 is a really, really, really good instrument to trade on the CFD side. All right. Are we gluttons for punishment? Are we going to try to take this last? This is like the worst trade ever, but I'm still going to try and take it. Why is it a bad trade? Because we have higher lows, which means we actually have a rising trend in the US 30. They're buying the market, right? So whatever higher red we're selling, not a great idea. And this is, we already failed twice, but third time is the charm. Is that what they say? we're going to give it a shot if this goes red again here, because I kind of think that, they're setting us up for a little bit of a fall. But we'll see. I'll give it a shot, just to give you an example of an execution trade here. Let me see what gold is doing. Oh, gold. We want to go long gold. I'm a little bit late here. Let's see if we can get long gold. Buy. Okay. Again, I literally too small a size on gold. I should be 10 times the size on gold, but I'll work on my size later. So gold, I want to adjust this thing to half $1, $1.50. Modify. Let's see if this works. So target is 620.85 on gold. I was late on this. I should have been here, and I would have made the money if I came in late. I just was, I wasn't looking on gold. But gold was. Remember, we were saying that we wanted to buy if the sell goes green above the moving average. Wanted to buy this. So I'm just a little bit late on the execution. I'm sorry for this, guys. Trying to watch a million different things here. I'm watching the US. Oh, God damn it! I'm sorry, guys. I'm missing all my trades here because I'm watching too many instruments. So the Dow would have worked beautifully as a third sell, right? The gold, I'm late on it, and now I'm getting stopped out. All right, I'm all over the place. Pre-market as usual. My apologies in terms of missing the executions, but we'll focus. I'll focus and I'll get a little bit better here. Should have just simply stayed on the Dow. My apologies. The times to trade in the indices is after 10 o'clock New York. If you're above the moving average, the long-term moving average, and you're showing continuation moves, it's probably going to continue in that direction. Look at this. I knew they were going to I knew this was a bullshit pre-market ramp. All right, we will just be very patient. Now I'm going to hunt this trade like a motherfucker and make it my own because I'm just annoyed. Gold is a buy here. I'm going to buy this. Let me see if I can get this right. Hopefully this is going to. I'm still fooling around with trying to figure out if I have the right ratios here. What happened here? Am I in? I can't tell if I'm. Oh, I bought it all the way over here. Wow, what is going on here? I'm still trying to learn the platform. Am I in the trade? Positions. Yes, I'm long gold. I'm long gold at 2078. Let's edit this out. Okay. So we modified this. I took it way up here. I should have taken it up here again. All right, that's fine. I'm just trying to, get myself habituated. Is always going to take a little while. Habituated to the platform, to the vagaries of the platform and stuff like that. Which is why, always very, very good to trade small when you're starting out, just to get yourself, used to all the various things. When the market opens up, I'm going to switch to futures. I'm going to trade futures and see if we can get some futures trades going, and then we'll come back to the CFDs and see how those play out. Because we should hopefully get some signals. Okay, none of my gold stuff is working out. This was a chase trade on gold, anyways. I was just trying to trade this whole thing to the upside. And again, what happened was I just did not have enough proper execution. The one thing that's clear with CFDs that you guys are seeing is if you're not right there on the execution at the beginning, the spreads will get you, and the spreads got you. Not that I think on the future side it would have gotten you too, but the spreads will definitely get you more in the CFDs. Even more important than the CFDs to be properly positioned. 9:30. It's actually 9:30 open. We're breaking above the moving averages here to the upside. So now this becomes kind of buy bias, and now we're taking ourselves down. So we'll have to see what the market wants to do. What's NASDAQ doing? NASDAQ has a sell signal on futures. So what we're going to do is, it's always the futures that gives you the true signal, and you can always have the futures on the side here. So let's see if we can sell NASDAQ here. Is that right? Let me see if I can do this correctly. Looks like I did. And looks like a NASDAQ trade worked perfectly. You see that? So that was a nice clean $5 trade off the sell move. Would have worked obviously on the futures as well. But if you're not getting the labels on the CFDs, get those. You can get the signals on the futures. The futures are the true signals. I always say that the futures are the true signals. So you can have both of them side by side if you wanted to. Actually, really surprised that. I guess it's all just discrepancies in price action that's happening here. Now we're going to go to, how's the US 30 doing? See, US 30, it very much matches the CFDs. There's, the labels there. It's just NASDAQ seems to be off a little bit. Gold has nothing. Gold futures versus CFDs also I should be matching, I believe. See, they're matching. The only one that's not matching is NASDAQ because maybe some kind of pricing discrepancy there. I'm going to be a glutton for punishment, and if NASDAQ goes green, I'm going to go one more time. Excuse me, gold goes green, I'm going to go one more time. But this time I'm just going to watch gold and hopefully get the right execution on it. Now, you know what's interesting that I'm going to be watching? Right now, I don't have anything watching. But remember, 9:30, 10 o'clock, if I'm 100% wrong, which is totally possible, the market is going to turn positive. If we start taking out the longer upward trend in both NASDAQ, which is now starting to rally, and the S&P, then we're going to be able to set up that nice long swing trade. And we'll do a swing trade in the CFDs because, as many of you pointed out, CFDs are much more conducive to like 1 or 2 trades per day with larger stops and targets because that creates it's much easier to scalp futures than it is to scalp CFDs. You have to be very accurate on the entries. Not impossible, but definitely I think definitely more difficult. So in some ways we can think of the Think account as more of a swing-like account with a 1 or 2 trades per day, and the futures Apex account, which, by the way, let me put the Apex. It's almost going to be time to do futures trading, so I'm going to put the Apex big discount on here, and I'm actually going to, what I'm going to do? I'm going to log out of my Think account. I'm going to log out of this one for right now. We'll log back into it at around 10 o'clock when we have the when we have a chance to to do like more positional trades. But in the meantime, back to Futes. Let's look at Futes here for a second. Let's see what gold is doing. Let's see what Dow is doing. Let's see what the S&P is doing. All right, S&P gives us another buy signal. Gold is on the verge of going green again. S&P has a scalp buy, and if it goes red again, I'll be short here. I'll be short the S&P. Now I'm going to do this on the future side now. Just kind of we're going to do a little bit of scalping here, and then I'm going to see if we can get any kind of a trend establishment around 10 o'clock, and then we'll try to put on a CFD swing trade, which is probably going to be the best methodology for us to kind of do this. Maybe we'll do this starting next week, where we'll scalp the futures and swing the CFDs. 21 seconds left on futures side. Starting to come back down. I just don't want this candle to be super large, but we'll take it. All right, join ask. Sell market. All right, I'm short. Short this. Where's my stop? Why isn't it showing my stop? Huh, interesting. It's not showing my target. 21.25. I wonder why it's not showing my target. Okay, so it filled the target. So 1 point done on scalping. By the way, would have been a 1 point done on gold, but it is what it is. But yeah, I think what do you guys think? I think that's kind of like the better approach, right? On ThinkCap, the account I have is like the one that has like 3 levels. You got to go. You have to like trade through 3 levels to get funded. It's first level, second level, third level, right? Oh, let's see. So what was my? I already forgot what my poll was. Will CPI? Oh, look at this. I'm surprised. It's like it's almost even money. It's kind of like the US election. Will the lows hold? 52% say yes, 42% say no. I think no. Come on, guys. This shit's gonna go down. We're gonna test 5,800. Come on. Cut the bullshit. This is a shitty number. Market is way the fuck oversold. This thing is gonna end up 5,700 by the end of the day. No, I'm just kidding, but as my Jersey friends say, get the fuck out of here. No way we're gonna go up. We're gonna not hold. I'm using the 3-time one, which is to answer your question, Andy. What I wanted to let's do a new poll. Okay, so we'll see if the lows hold. We'll see if the yeses hold. But what I want to do is I want to do a new poll, which is if you let me see if I can do this in a couple of questions. What do you prefer? And it's going to be kind of a compound question. Scalp futures, swing CFDs, or scalp both? It's kind of a compound question, but I'm actually curious, what you guys think. Let me know what you guys think. I'm kind of curious how you guys are thinking about it. Getting close to breaking those lows. So everybody who voted for breaking CPI lows, getting into the zone. But maybe not. Look at this. If this holds, You guys are winners today. You guys have pulled out a key thing. YM giving us a sell signal, nice and easy. We'll look to see if we can get a follow-on trade on that. Let me see what you guys are answering on the polls. About 2 to 3. Everybody wants to scalp both. That's interesting. Okay, a lot of people want to scalp both. Okay, back up into the greens on the YM. Not quite there. So I wanted to see green reds. Anybody from Florida with me today? I'm just curious how you guys are doing. Where are you guys in Florida? Let me know, please. I know a lot of, actually it's kind of a stupid question because many of you have lost power, so you're probably not on the stream. Did I short the yes? So to explain to those who are new, who are not, excuse me, used to my setup, long-term moving average is here. We're below, so we're negative bias. So if we go buy label and then go red, that's a perfect sell signal for us. It means the buyers have failed. We love that. We love that signal, right? Now that signal failed us here because post CPI they were dicking around, it was there was a lot of buyers coming in, to buy the bottom. But generally, on regular market days, this is a great structure for us to trade. Yeah, like everything else, it works. It works 100% of the time, 60% of the time, as they say from Anchorman. All right, YM is. Oh, that sounds like a fire truck, man. That sounds like a big ass fire truck. YM is holding on to the green, but if it starts turning red, that will give us a chance to do another sell, because our primary bread and butter trade is we trade in the direction of the big trend. Anytime we get, we have a sell label, we get a red zone after that. That gives us the confirmation signal that they're selling it. We're always looking for confirmatory continuation trade. We're looking basically continuation on a confirmation basis. So, YM holding. So everything else I'm looking at my side, my other chart. But now it's starting to break down to the red side. 11, 10, 12 seconds. We have to make sure that it stays red. Okay. Right. Oh, it was super fast. That was so fast that you saw that autofilled. Let me show you this trade so you guys can see it. What's going on? Why can't why isn't this trade? Hold on a second. Why isn't this working? Settings, trading. Am I in the right account? I am in the right account. Why isn't this trade? See, we sold 78, bought 73. Why is that not on the charts? That's weird. For some reason, it's not showing me on the charts. That's really, really weird. Huh. Maybe something wrong with the TradingView. For some reason, the CBOTs are not showing. That's really, really weird. I don't know why. Okay. Anyways, the point being is that was a nice clean trade. Boom, boom. We made 5 ticks on YM. just scalping it away. All right, let's see what the S&P is doing. Let's see. Gold actually has a buy potential signal, but now we're dropping below the moving average. So for all of my negative bias, we're going down to the lows. So far, it hasn't happened, right? And we're kind of holding, right? We call it kind of holding. And as I said, 10 o'clock, they start taking it above the moving average. You gotta start thinking swing trade to the long side, and we're going to switch to the CFD account and try to trade that to the long side. But in the meantime, it's scalping galore. What do you guys? I hope that this is going to be really cool. That how we talked about like 50% of the or 45% of the crowd wants to do swing trades, and I'm only doing scalp trades here. The perfect background, no green screen and sirens. Sorry, what do you mean? I don't have a green screen and there's sirens in the background, or there's no sirens. The green screen is coming, man. I think I finally I slayed that beast. I think I finally found the right green screen structure, but we'll see. Oh, big buy. I'm not chasing this candle. So here's what we do. Now, this could definitely work, but why am I not chasing this candle? My stop is $1.50. This is like a $3 candle, $4 candle. It's 3.5 times my stop. So that means even if I'm right, it could just stop me out and then go up. The volatility here is just too large. It's not just the signal, it's the quality of the signal that you have to evaluate. And when you have a massive volatility, unless I'm willing to do a much larger stop and target, there's little reason to want to commit to this trade at such a huge vol breakout. Not because it's not going to work, but because it's going to not work before it works. It's going to stop me out before it works, right? As far as my scalping. That's a very, very key nuanced thing that you guys see over and over and over again. I'm going to definitely, we're going to implement that much more as we trade, as we get better in terms of our techniques. All right, I totally lost my train of thought. Oh, my train of thought was, let me see what everybody's doing here. Yeah, so on the poll here is 62s want to do swing scalp futures and swing CFDs. So here's the thing. You know how I've only been scalping because futures are obviously, lend themselves to scalping, and we really haven't had a good a swing kind of a trade signal. Now we can think scalp apex, and I think that'd be a perfect combo of both. So this is interesting. I'm just curious, if I bought this 39, how long? 37.8. I think I would have survived this. So this is a good example. I barely would have survived the stop, and then I had 39.5. It would have hit target. But it was a very, very close move. That's why I passed up on it. Just kind of let you know. S&P breaking the lows almost. This goes down below 814. I think it's going to 800, as I told you guys. It's going down this way. It becomes a negative swing trade. By the way, we're kind of deep underneath here, right? And I want to watch this. But what time is it? 9:48. It's a little early. I'm just trying to see, and there we go. 813 breaks the lows. This is the 830 lows. We'll break the lows. All right, you know what we're going to do? We're going to go into the Think account. Where's my Think? I always get lost with so many. Where's the Think account? Oh, here it is. Sorry. Am I in? Oh, why is this? I'm gonna have to put this into a separate browser. This way, I won't ever have. Why am I having? Okay, I'm in. All right. I'm just watching the Think account here. Actually, you know what? So here's going to be the solution. I'm going to have the Think in Chrome. Let me see if I can find. Oh, I'm in my. Damn it. Maybe we'll go in here. Let me see if I can go. Microsoft's own useless account, useless browser, which I can't stand. But let's give it a shot. Sorry, guys. I'm trying to organize myself here. Trying to trade two accounts at the same time live is going to be. All right, never mind. I'm going to have to do this next week when I set this up properly. All right, I'm in Think right now, right? And what I'm going to do is I'm going to set up a swing trade here. And my swing trade is going to be like at least 10-point stop. I'm just going to sell this with a 10-point stop and a 10-point target, which in this case is 100 ticks. On this assumption that we're going to go, that we're going to, okay. On the assumption that here, here's my stop is essentially at the 200 SMA, a little bit above it. I'll put this up here. On the assumption that I think, we're going to retest the lows. Now, this is just my bias, right? It's by no means a signal, because the real signal would be if we kind of crossed over after 10 o'clock and, stayed down. But we've sort of like, today is sort of a bad example for all my swing trades, because the real news was here. We established a negative trade here. And the idea is that we should have some continuation off this negative trade. We'll see if it holds. I'm not holding my breath, but I'm just trying to practice the idea of doing a swing trade on Think. And on the other hand, by the way, the other thing that we can do, which I don't know if I'm going to have enough margin. The only problem is I don't have enough margin. If this thing goes positive, so I'm just gonna let this trade hold out for right now. But if the Dow goes positive, this is actually going to be a much more conducive example of my swing trade. If this thing goes positive after 10 o'clock, in other words, the moving averages start to cross and it holds, that will be a much more legitimate trade than whatever bullshit I'm doing here. I'm just trying to force my own opinion on the market right now here. So I'll leave it alone. If it tags me out, it tags me out. But then I'll get large on the Dow, and that should be a much more interesting trade if the market totally turns itself around. We'll see. But anyways, let's get out of Think for right now. We can always come back to it. And let's go back to scalping. I wonder if I can I make it a favorite? Oh, I think, no, I can't do it, huh? That really sucks. I wish I could just always bring it up to, oh yeah, I could. Never mind. Here it is. Here's how you make it favorite, right? There it is. So now that becomes a favorite, and this becomes a favorite. Oh, look how smart TradingView is. So you can make your broker favorite, and then it's always going to come up on your thing, and then you're going to be so much better in terms of structure. Okay, so now I'm going to go to Trade Evade, and now we can scalp to our heart's content. Oh, somebody said they made $400 in live and past 2 Apex evaluations. That's great. Good for you. Let me give you the Apex link. I'm actually so excited about this. I'm so excited that I can do scalping, to my heart's content, which is really my bread and butter. But it can also do swing positioning now with Think, which probably the proper way of doing it on the CFD front. But both of them should work really well. Just want, because why the reason why I'm kind of focused on this is because we are actually turning positive on the market, right? For all of my, hey, we're going to break the lows. We tested the lows, it's a double bottom, right? It's a double bottom. Maybe we go back down again, but if we kind of clear the moving average and start holding above it, it's definitely going to be much more of a long side trade. So I'm just watching this very carefully right now to see what's going on. Let me see if anything else going on. Yeah, gold had that big pop, which we didn't chase, and NASDAQ also starting. Look at NASDAQ. NASDAQ is also starting to show some love to the upside. Everybody, all the fish want to swim swim to the surface. So if that's the case, look at this double bottom on NASDAQ. Dow the strongest, really clearing, almost clearing the trade. Dow is on the verge of clearing the trade here, crossing over. So if it crosses over, this is how we're going to do this. Dow crosses over, excuse me, and then we have and then the price stays above the moving average, goes red, then goes green again, meaning that maybe retraces a little bit, but holds above the moving average and goes green again. We're going to go long the Dow on a swing basis for the CFD. It's really cool. We're going to have like now I'll have like a one continuous setup while. Did I cover shorting buy signals below the moving average? Yes, I did cover that in the past the prop test. Yes, I did. In the past the prop, you can, if you guys are interested in past the prop, by the way, my coaching session, or if you guys just want the indicators that we have, here's the link to coaching, and here's the 1 month discount to all of our stuff. All right, Dow definitely bullish, really nice and bullish. All right, here's what we're gonna do. I'm gonna jump the gun because just today is really an experimental day for me on the two account front. So I'm fucking around. Let's God, I wish it would just remember my thing. Why does it not remember my thing? Oh, I think I know why. I have to go into my Google Chrome and fix the logins. Okay, so here we go. Oh, Dow just came back off of it. Okay, so I'm going to stay here. I'm just watching the price action here. It's obviously feeling a little bit of resist here at this level, and it really got rejected big time. 4,500 came back down by 30 points. Wonder if my long thesis is gonna. But I'm really trying to create a long trade, but a swing trade, but I can't do it. Dow CFD is up, but futures are down. Yeah, sometimes you're going to get discrepancy, although no, they're both down. Down 23 on the CFDs, down 26 on futures. But NASDAQ is also trying to swim to the surface. So the point being is, we were down like what, 0.5%, 0.75% off the news, and now we're trying to swim back up to the surface. And if we come back up to the surface, I definitely want to be there. I want to be there for that ride, And we're getting close. I don't have any scalp trades for you guys, so it doesn't really much matter, because everything is underneath the surface here. So we are we're just kind of waiting for things to come back up. But it looks like they're really, the 10 o'clock move here. This is what we're talking about. The 10 o'clock move. Can we go up above this? Can we establish a reasonable trend here post 10 o'clock? NASDAQ looks the cleanest, but so is the Dow. We're just watching both of those. See if we can cross over into the positive territory and trade there. Gold really, really held up. Gold actually was, it's very hard for me to trade gold on this kind of a swing signal basis, because gold doesn't have a natural breakout time or natural trend time, because gold really trades 24 hours a day. But, with equities, it's like a 10 o'clock move and a, 1300 to 1400 move. By the way, third ambulance in a row, right? We're definitely very, very, very active today. All right, NASDAQ still looking very strong. They bought the bottom, double bottom. Let's see if they want to swim to the top. So far, they're buying up the Dow, all holding higher lows. Market clearly still wants to go long. I'm actually curious. I want to look at Twitter for a second, see what anybody has to say about anything in terms of what they thought about the data and everything else. Poor Claudia Sam. If you guys know Claudia Sam, she's a great economist. Just diagnosed with breast cancer. Really terrible. Let's see any. This Forex Live. Oh, wow. Yeah, I mean, you guys want to know why gold is up? And this is, not a political comment. This is actually an economic comment. If you guys know who Stephanie Kelton is, great person, know her, really wonderful human being, but she's a big MMT proposer. If you know anything about modern monetary theory, it is just basically all about massive, massive deficit spending in the short run. And that obviously creates even more inflationary pressures, as I was saying. This is why I think, gold is acting so well. All right, we're getting, close enough in think markets that I'm just going to pull the trigger on this Dow trade and just going to leave it alone, with a 100 stop, 100 target. Let me see if I can do this with a 100 stop, 100 target, or maybe even 50-50. We're not going to get crazy. Let's get 50-50. Just even money on this trade. Let's see if we can swim to the top on this. Wait, did I just screw this up? Yeah, it's got to be this way. See, look how nice it is, how easy it is to adjust your stops and targets on TradingView. Super easy. All right. And now we're going to let you know if I'm right, if we want to swim to the top at the 10 o'clock hour, we're right. I'm jumping the gun just because I don't have any patience today, and I really want to go back to scalping. But I will establish a much better procedure on Monday, because I'll have two separate browsers, and then we won't have a what's going on over here. What happened here? Oh, I clicked the wrong link. What is this? What the fuck? What? Oh, I'm TradeStation. Oh, God damn it. I'm sorry. Okay. So now we can just go back to looking at Futes and see what we can do on the Fute side here. Futes, gold, really, really big, nice, clean pop, 10-point pop on gold. Gold really is the best long term. Oh, here it finally popped up. Look at that. That trade finally printed. I guess I could think TradingView was just really delayed, but you saw that scalp. The 5-point scalp on the Futes. Now we're kind of reconfiguring ourselves to the upside on all the Futes, right? S&P has already kind of cleared the upside. So now we're going to be looking for buy labels and then green zones to see if we can scalp out a little bit to the upside. Yes. The other day I tweeted out, Rich is talking about the fact that China is doing stimulus spending. And I basically said that, in modern world, it really doesn't matter if you're a capitalist or a communist, because we're all Keynesians, meaning that in a modern world where China lives in a capitalist economy, which is a consumer-based economy, whether it's a communist country with a capitalist economy. So whenever you live in capitalism, consumers are effectively like voters, right? Consumers, when they don't have a chance to consume, have enormous amount of displeasure. So the governments have no choice but to always deficit spend, because you have to satisfy the consumer. It's actually really interesting. It doesn't matter whether you're a communist or a capitalist. If you're committing to a transactional economy, you better make sure people have money to transact. Otherwise, you're out of business. So it doesn't matter whether you're a communist or a capitalist. We're all Keynesian at this point. That's how it goes. I just thought it was funny. S&P, struggling a little bit, but hell, we pretty much held the lows. We really haven't broken anything down here. And you noticed that the 10 o'clock hour here, we're moving through. By the way, my think is going to work really nicely. I wonder if my think is going to hit. I already forgot where the hell I was on my target, but I think it was like a 50-point target. So I could be. I'm not logged into my Think platform. I promise you on Monday I'll have two browsers, and then I'll be able to switch between one and the other on the accounts. But yeah, this is working really nicely actually. That's that nice swing trade. It worked very, very fast, but generally it takes about half an hour to an hour to kind of mature. But hopefully you guys will like it. I love the idea of doing like one, big trade and a whole bunch of tiny little scalps, because I know so many of you, half the room is degenerates like me, love to scalp all day long, blah, blah, blah. We all do really well. But the other half of the room is actually normal human beings who just don't have the dopamine addled, keyboard monkey response that we do. So for those of you, this is going to be a really nice opportunity for longer, more intelligent trades. Oh, somebody's saying the city is too much noise. Here's a funny thing. USA forever. I'll tell you a funny story. It's all what you're used to, right? So obviously you hear like just endless noise, right? I'm 11 stories up, by the way. I'm 11 stories up, but I live on Broadway, which is next to a fire station. So it is it is just always activity any time of the day, right? But you know, I've lived here forever, my whole life, pretty much, or my whole life since college. So a long time ago, my my brother-in-law had a cabin up in the woods on Hunter Mountain, literally like on top of like this town called Tannersville, like right on top of the mountain, like the last town on top of it. And it was dead silent. Like, I mean, there wasn't a human soul around. It was dead silent. And I could never, ever sleep in that place. The silence drove me absolutely crazy. Like that, what made me batshit bonkers. And I used to always refuse to go to the cabin because I could never get any fucking rest. So, you know, it's all what you're used to. You know what? Let's take a look at, we're starting to pop on the NASDAQ scalp buy. Let's take a look at this NASDAQ. Yeah, look at NAS. Remember I said to you, NAS is kind of popping up. So both of them, everything is turning. Now we're just kind of waiting for the setup trade. We need a red green structure. In the meantime, let me see if I can just quickly go over to the Think account and just get myself. And I promise you that on Monday I'll have both accounts up. The other thing is I'll have my logins. All right, cool. We're like 35 points up. I'm just going to take this trade right now because I don't want to be putzing around back and forth with it. But that was a nice, clean 35-point trade in Think, and now we can go back to Tradeovate and get ready for some scalp trades on a nice, clean positional trade. And that's what we're going to do. That's what we're going to do. So, Rich, you like the 50-point trades? So we're going to do the 5-point trades and the 50-point trades. That's how we're going to divide ourselves. Okay. Oh, this is my final poll of the day. Let's do this. This should be fun. We're really going to divide the degenerates from the real people here, from normal people. Here's the question of the day. Wait, hold on a second. No, I don't want to do Q&A. I want to do poll. This is a fun question. I am you'll see the I don't want to read it out loud because I think it's fun. 50. All right, identify yourself on this poll. Tell me who you are. Tell me who you are on this poll. All right, buy on NAS. Let's see how the S&P is doing. Buy on the S&P. Let's put S&P and NAS side by side so we can watch the scalping. All right, S&P coming into red, hopefully red to green. We'll see it, or if it dips below, then it dips below. Okay, the true degenerates are going to show themselves up here. Let's go voting, guys. Let's go vote on my poll here, please. I'm watching the S&P, watching the NAS. S&P dips below, but doesn't mean much. If it goes red, green, it's a buy for us. If we go back to the green zone, so we'll see. I'm going to set myself up for the S&P here. Oh, I'm logged out of Tradeovate. Come on, baby. Come on. Okay. Long Tradeovate, 44 seconds on that trade. The S&P. Let's see what we want to do here. Nope, does not hold the green. So we'll be patient. Let it marinate a little bit more. NAS definitely holding the green. Oh, now S&P goes green now. 4 seconds. Let me see if it holds. Okay, it holds. I'm long, and it kind of slips against me, which is not. Oh, did it? Oh, Oh, damn it! I gotta kill this. I'm sorry. I gotta close this. Even if it's not. It's not. The reason why I killed it is because it didn't hold the last second, and it doesn't matter. I'll come back to it. I'll come back to it if and when it turns green. I'm no longer gonna just hope and pray for the recovery trade. That was just a fake out trade at the last second, and it happened. All right, we will wait till the candle closes before we commit to this trade. NAS, by the way, really starting to push up nicely. S&P is struggling a little bit more. So the trade, just to kind of let everybody know, above the moving average, we look for buys, and the buy is always done in a 1-2 fashion. First, you get a buy label, then we have a red zone, then we have a green zone. The green zone is the trigger candle, is the candle when we go long, right? So we're above here, we're in the green zone. If we have a red zone, a green zone, then we're going to be taking the trade. Here, we're finally trying to build a green candle, but so far, no. And the reason why I pulled myself out of this trade was because at the very last second, we turned red, which means we did not get a confirmation that there's an upward trend here. So I didn't want to be faked out, and I'd rather let the market tell me for real. Because the flip side of this is, you could have prayed all the way down to the bottom here. So I am not. I'm not the praying type. 16 seconds left now. We're kind of holding more clearly above the trend, but still not. I'm going to wait until the candle actually closes. Okay, long. 30.75, 31.75 is a target. A little bit fast execution on a chase. If it doesn't work, at least this was a legitimate trade. If it doesn't work, it was a legitimate entry on a proper setup. But at least I did a proper entry on a good trade. Meantime, NAS is also maybe giving us some opportunity here because we're going red, and then if this goes red, stays red, then goes green, we're going to get long NAS as well. But what you're seeing, by the way, is here a development of a upward, bias at the 10 o'clock hour, which is what we were trading. We're trading on the CFD side for those of you who are more. So NAS now goes red green. Okay, NAS is kind of red green. Now I can focus on NAS. And if this holds green, then we may have a trade here. And if it doesn't, it doesn't. Oh, so the S&P got filled 16 seconds on the NAS. I'm waiting for the NAS. This has got to hold green in order for me to trade. Okay, buy market. I bought the 408s, kind of slipped against me. Our target is going to be 413 on the NAS. NAS is slipping against me. NASDAQ will do this much more than the S&P, which is why I prefer the S&P always. But NAS is also very lucrative when it works. So, if it doesn't work now, we'll give it another try later. But it did, it did slip up hard against us on the entry. I was hoping we'd get a little bit more continuation. Pretty natural, by the way, when we cross into the brand new trend, to have a lot of hesitation. So not unusual to have this trade not work. But if it holds, the next series is going to work, and I'll trade the next series. May not be able to do it with you guys, but that's Okay, so we got tagged on NAS, but we made money on the S&P. We'll let it go. As I said, NAS is always much more hesitant on the trades here. But if the series holds, in other words, if we're holding above the long-term average, which we may or may not, it's an open question here. We'll reconfigure and trade again. All right, let me get rid of all these things so that so they don't pollute the chart. The moving averages are the 200 moving average and the 8-period SMA. So like a nice short-term moving average and a much longer-term moving average. Just watching everything else. So we are clearly sort of, hesitating here at the 200 moving average. And by the way, if we test this and this thing kind of turns negative, like, both of them start turning negative, that's actually the possibility of my original impulse that, it maybe it takes us a long time, but we go back and test the session lows. It's still, I think we're far away from kind of becoming bearish bias right now. We're still primarily bullish bias because we're near the moving average. As I said, we all swam to the surface. Now they poke their head below the surface to kind of retreat a little bit, but they haven't really sold them off hard. It's hard. Excuse me. Oh, sorry guys. It's hard to kill the bulls just yet. But whoa, we're really flipping around to the negative side now. It's interesting. Okay, I gotta, like another 10 minutes to hang with you guys. So we'll see how this develops. If in 10 minutes he kind of holds underneath here, that might be a really interesting short trade for us, both on a CFD side and then start looking at scalp trades to the short side. So I just texting with my daughter who's in Sarasota, just, charging her phone. They're out of power there. So trying to make sure she's okay. All right, not much happening just yet. The poke above the SMA lasted short time, but we haven't really come back down hard here yet either. So we have to just let the jury is out as to what the trade wants to do here. Getting a sell signal on the S&P, so that's interesting, because if you get a mild retrace up and then further decline, that would suggest to us that now it becomes a sell signal on all these fronts. I want to switch to CFDs for just 1 second, just to see something interesting. I want to see if I was kind of correct. So Dow continues to be the best, sort of the strongest of the moves here. And here's what I want to kind of tell you. The way I interpret like a quality swing signal is if we get both of the short term above the moving average, and I have like 2 green zones with a price holding above the moving average, then it gives me confidence that they actually are going to take it higher. Right now, we're still very much in a indecision mode. This is kind of the Maginot line of the market today, and the market seems to be torn between the overall bullish tone of equities and the clearly negative CPI data that we saw. And it may be a situation where they're going to just shrug it off. They can just say, screw it, it's a one-off. The Fed is still going to be accommodative. Or it may be where, a situation where the reality starts to sink in. And if we get to a point where, if we're going to kind of sell off, go green, and then sell off again, that really would trigger for me a sell swing signal, meaning that the market now has kind of decided, after 10 o'clock, this is pretty negative news. I don't want to be long equities. I want to do some liquidation. Actually, I'm going to go back into I'm going to go back into sorry, God, all of this I'll fix on Monday. I promise you. I hate doing this with you guys, where you guys have to watch me tap away at the screen. It's awkward. But the reason why I kind of want to do this is because I want to sell this for another 50 points, and the stop loss should be 500. I want to sell this. I think we're going to be so now the reason why I kind of sold this, because this is the second. I'm very late actually. I should have been selling 84s, like 30 points below, but it doesn't matter. I'm doing a swing trade because I saw a second red zone, I'm sorry, underneath the long-term moving average, and that tells me that after 10 o'clock, the market's kind of deciding to get negative here. Ironically enough, the S&P is going higher, but the Dow is going negative, and so I am going to follow this move to the downside here. I'll let you know how that plays out on Monday. I'll have everything set up much better for Monday, so we'll all be in good shape. I'll go back to scalping for just a second, see if there's any scalp opportunities for us on the side here. Look at this. NASDAQ sell underneath the moving average, turning around. I'm going to try and sell this NASDAQ if I can get into it. S&P, not NASDAQ. Sell the NASDAQ. 27 seconds left. If this thing stays red, I'll try to sell it for a point. Hmm. 11 seconds left. I'm going to let this candle complete before I commit to anything. Nope, stays green. So we'll have to wait. Either the next candle is going to go or it's not. But we're going to be patient here on the moves. How's the Dow? How's the NASDAQ doing? NASDAQ actually is popping back up, so that's interesting. NAS is fighting the move to the downside. 37 seconds left. This is a red candle. It stays a red candle. I'll be short this thing for a point to the downside. Now go. Now go on that. Market's really indecisive today, right? Look at that, 10:30. Kind of trying to figure out which way we want to go here. Basically been trading, 5 points either side of the 200 moving average as kind of holding. We may, it looks like, maybe the bulls are going to wrestle control from the sellers. I'm very impressed at the fact that the bulls have been able to manage to bring this up, but at the same time, they can't push it up to fresh highs. So, the game is still theirs to lose today. Now we're getting a lot more redder here. 39 seconds left. Let's see if this candle holds. I'll try to see if I can short this. Twenty seconds left. All right, I'm short this, targeting 25.25. There we go. And we're good to go. Final trade of the day, nice clean scalp. I will update you guys on the swing. But I think, Monday I'm going to have my shit together. We'll scalp the Apex. We'll swing the Think. I'll have double logins, so I'm not going to torment you with the 2 logins, and you'll see how we can do both. So hopefully that will all be good. Okay, everybody good? Oh, let's go to my final degenerate poll. You're a 50-point trader. Oh, look at you, degenerates. Look at you guys. Look at you guys. 62 to 38. I got to show this to Kay, just because she doesn't really appreciate. It doesn't appreciate the true degenerate nature of my crowd here. All right, guys. Thank you so much. Another good session for all of us. I hope you guys really enjoyed it. Trying to do two different accounts, two different structures. That was a little bit of a stretch. Anyways, let me leave my Apex link here for you guys. Let me leave the Think link. Let me leave the Join Us link. Okay. Everybody have a good time. And let me also leave you with a free giveaway, which is the prop trading guide over there. So everybody can have all the goodies from us. I will see everybody Monday. Everybody in BK, we're doing our Friday, private session. So we'll have a good time. I'll see everybody Monday. We're going to go hardcore, and I'll have everything organized, much better. But hopefully you guys enjoyed it. It's always a shit show with me, but it's always a lot of fun, right? Everybody have a great day. Thank you so much. Another good trading session for all of us on both sides. I'll see you guys later. Take care.